Hey guys, welcome back. Well, let the roller coaster ride begin. We knew this week was going to be volatile. We knew this was the biggest test for the memory sector this week, and it has started off with a bang. Today, we saw so much downward pressure, not only in the memory sector, but frankly, across all of the AI hardware names. And it's all contributed to one story that came out today that just stoked significant fear and anxiety across the entire market. Now, there's a lot of macro headwinds right now that the market is facing as well. Don't get me wrong. We see rising oil. We see fears about interest rates that may go up or certainly not going to be cut. We see increasing treasury yields, and that is putting pressure on the tech sector as well. But there was a story today out of China that I think just stoked fear, not only in the memory names, but across the entire AI hardware stack. So we'll get into that story because we saw pressure on Micron. It was down over 2%. SanDisk down over 11% today. The ADRs of SK Hynix were down about 7.5%. And we saw both Western Digital and Seagate down over 4% today. The Fab 5 had significant pressure on them throughout the day. But all of the picks and shovels did as well. This wasn't just isolated to the memory sector. Because if you look at your portfolio today, it looked like we had a significant breakdown in the AI narrative. But when you pull back the curtain or you dig underneath the surface a bit, you could realize that today's drop was not driven by deteriorating fundamentals. It was an algorithmic driven headline shakedown based on what we saw coming out of China. And there were some other signals in the market today that I want to cover. So we'll go through our market signal framework of red, yellow, and green. We'll put it all together at the end. I'll give you my outlook for the rest of the week, but let's get started because we have a lot to cover in this video. Guys, if you haven't hit like or subscribed yet, do it now. Like the video, subscribe to the channel. We still have 50% of our viewers that haven't subscribed to this channel. So if you like these videos, if you've learned something on the channel, if you like me as a host, do me a favor, hit subscribe. All right, let's dive in and take a look at what we saw in the market today. I'm going to pull up the Yahoo Finance numbers because I want to show you just the impact that we saw across all of the technology sectors, but particularly take a look at the semiconductor sector there, down by over 3% today, significant pressure. Look at the software to its right. Software stack was up over 2% today. Consumer electronics, it's a big bubble. It's really one company. It's Apple. Apple has been on a great run. They actually have become, again, the #1 market cap company in the world. So they passed NVIDIA based on the recent run we've seen, based on some of the downward pressure that we're seeing with NVIDIA. But Apple is showing some great momentum heading into their earnings on Thursday. If we dig a little deeper or drill down one level, we can see in the semiconductors, the compute players had pressure today. NVIDIA and AMD both down roughly 5%. Micron down by 2.25%. Well, when I show you this candle chart for Micron, I'm excited to show you because you're going to see a moment where institutional support stepped in, rallied the stock throughout the afternoon, and it finished with a bang in that last 5-minute candle with a nice surge, got it up over $900 a share again. But it is clear that we have a support floor with the stock, and we'll go through that in a moment. But as I mentioned, SK Hynix ADR was down. If I jump over to the other players just to show you, you can see SanDisk down by 11%. Guys, I'm going to drop a video focused entirely on SanDisk because it is quite a story that we're seeing with the stock. Up over $2,000, down to right now $1,200, $1,300 a share. I want to cover what is happening with this stock. We know it's a high beta stock. It moves quickly. Their earnings are coming up next week on August 5th. So that could be a significant catalyst for the stock to get it back moving in a bull run again, to start getting some green numbers again with SanDisk like we all want to see. As I mentioned, Seagate heading into their earnings tomorrow was down today about 4%, and Western Digital was down 4% today as well. But let's start off with what drove the sentiment. I said it a number of times in the opening. It was this story coming out of China. We knew CXMT's IPO was happening today. We know the anxiety and the fears that's surrounding this stock and the impact people feel it's going to have on the memory sector. Well, guys, it didn't just drive down this memory sector today. It kind of drove down the entire AI hardware stack, and I'll show you why. But clearly, as you can see on MarketWatch, it says Micron and other chip stocks fall as China steals the spotlight. So there's a new hot memory company on the block, and the shares of the more established players are losing some luster, or at least they did today. We scroll down here, we see CXMT became China's most valuable publicly listed company after strong reception to its initial public offering. It has a market capitalization now of just under 500 billion. So we know that they don't have access to ASML, extreme ultraviolet lithography machines, to help make HBM, and that holds them back significantly. They're more focused on DRAM. But some of the other news that came out today was that they actually began making their own deep ultraviolet lithography machines, potentially hinting that domestic chip makers in the country could become more competitive. And because of that, we saw ASML drop down today. If I jump over and to show you, you can see the picks and the shovels down here in the middle of the screen. ASML down by 6%. Applied Materials down by almost 4%. Lam, KLSE, all down significantly with pressure today because of this story that is coming out of China, that the fact that they may be developing their own lithography machines. And if I jump over to Tom's Hardware, you can see the headline here too, that China begins mass production of homegrown lithography chip making machines in major breakthrough. Report claims that the first DUV lithography units will be delivered this year to 3 companies in China, including CXMT. Now they're targeting 5 machines this year and 20 machines in 2027. We'll come back to that and talk about the scale of that and what that means overall. Let me make sure there wasn't anything. That's all I want to cover in that article. But those were the 2 sentiments, guys, that drove down fear and anxiety today. There was kind of this double sword, or this double threat with this story, at least on the IPO side, because there's fears of just flooding the market with DRAM, that we're going to have a supply glut based on what CXMT is going to bring to the market. But there was also this kind of regional liquidity, this cash drain, as the Asian desks dumped secondary chip holdings to chase this debut listing. It was the most successful listing. It's actually the largest publicly held company in the STAR index in China right now. So definitely a successful IPO for CXMT. And then we had that lithography news that came out, that the fact that they revealed that there's a state-backed Shanghai startup that has officially begun low volume of manufacturing of China's first domestic 193 nanometer immersion DUV lithography tools. They're targeting 5 machines this year, 20 machines next year. But trading algorithms, they immediately panicked, and they drugged down the Western equipment and memory names on fears that China fabs are about to achieve total self-sufficiency and flood the Asian supply chains. And then I think there's just this continuing theme that's happening in the market right now, all around this pre-earnings, the ROI skepticism, based on what we saw with Google. So we know Google raised their CapEx. We know they showed negative free cash flow. And I think there's anxiety right now in the market that's being amplified by the media regarding big tech's CapEx expenditures or capital expenditures. Heading into this week, we knew it was going to be a volatile week because all of the hyperscalers, the ones that are driving that CapEx numbers, are going to be reporting their numbers. And headlines are aggressively questioning whether hyperscalers, whether they can continue this AI infrastructure spending, and if it's generating fast enough ROI to justify the current valuation. It's causing hedge funds to de-risk high beta memory names, but we have to ask ourselves, and when we take a step back and we look at it, we have to ask, is the underlying structural demand for AI memory, is it broken or is it breaking? Or is this just a classic headline shakeout that we're seeing in the market today? And to answer that, I think we have to look at some of the yellow signals that were in the market, the ones that are confirming the demand that we see, because there's a few that I'll cover overall with you guys on the channel. The first one is going to be kind of the gauntlet of memory earnings that we see this week. I mentioned in the beginning, we have not only Samsung reporting, SK Hynix, Kioxia, we have Seagate tomorrow. And I wanted to put up a quick kind of infographic for this memory earnings stress test that we'll see. These are the earnings. These are the companies that are reporting this week. We see the key numbers or figures they have to beat, what the bullish confirmation will be. And you can see across the bottom, if we pass all 5, the super cycle, the thesis is strengthened. If we miss multiple signals, we risk further multiple compression in the sector. But we need Seagate to show that they can beat $3.5 billion in revenue, that they can pass the $5.10 EPS. They need to show strong demand for HDDs, gross margin expansion, hammer adoption, and positive forward guidance as we move forward for full year 2027. SK Hynix, we know they need to beat the revenue of $57.6 billion with operating margins in the highest level they ever had, which is in that 75 to 77% range. We need to hear great guidance for them on HBM4, whether it's on track, continuing to confirm the average selling prices are going up for DRAM, going up for HBM. We'll see that operating margins for them, and obviously the pricing remains firm. Samsung, we almost forgot that Samsung needs to report out their full earnings on July 30th. And in this earnings, what I'm looking for is specifically looking at that semiconductor division. How did they do? Because we know the revenue is supposed to beat $112 billion, the operating profit over $58 billion, but we're estimating that semiconductor division is going to be 90 to 94% of the total operating profit for Samsung. So we need to also continue to hear HBM yield improvement, strong DRAM profitability, that division, semiconductor division, driving the majority of the profit, and positive commentary on HBM4 moving forward. And then finally, Kioxia, they report out this week too. Operating profit needs to beat over $8 billion, $8.2 billion is analyst consensus estimates. And then operating margins of 74%. So here we're looking for improving NAND average selling prices, disciplined supply outlook, positive demand for the second half of 2027. That's the piece we're looking for. It's going to be an awesome earnings week across the hyperscalers, all the companies, but these memory giants as well will give us so many signals for the sector overall. And then there were more signs, yellow signals for me, strong for the sector. I'm putting them yellow because they in some ways could put Micron in a competitive disadvantage. But Samsung has been making noise. They announced a number of different partnerships, all came out of this summit that they had in San Francisco that we talked about at the end of last week, where NVIDIA, they announced their partnership with SK Hynix. Well, we're seeing Samsung now announce a number of deals and partnerships on their own. Samsung and Broadcom, they have a pact that's expected to top $200 billion. Let me scroll down. You can see here, Samsung, Broadcom say that their expanded collaboration across memory and foundry technologies is expected to exceed $200 billion over 5 years through 2030. The agreement is a memorandum of understanding rather than a final purchase contract, and the companies did not disclose how the estimated value will be divided between memory and foundry work. The memory collaboration includes high bandwidth memory for Broadcom's next generation AI accelerators. Foundry cooperation will focus on Samsung's 2 nanometer and below process technologies for Broadcom's products, including the wireless Broadcom communication solutions. So this was a big story, but the Samsung didn't stop there. They also had another announcement with more deals. So Samsung converts AMD and OpenAI ties into HBM4 supply wins. So if we go through here, we'll see Samsung is showing renewed momentum in the AI memory race as it deepens ties with OpenAI and AMD, 2 partnerships that could strengthen its position in the next generation HBM4 ecosystem and could, after seeding ground in AI memory, to rival SK Hynix. So they didn't announce the deals itself, but if we go through some of them, we said Samsung's collaboration would focus on memory technology and AI infrastructure, while Reuters later reported that Samsung was expected to supply HBM4 memory for OpenAI's first in-house AI chip. And then I think we also, if you take a look at AMD here, this was a big move because we know the Helios rack that AMD has. We know that Samsung is their primary provider, but they just confirmed it as well. Reuters reported at the time that Samsung would supply HBM4 from AMD's next generation accelerators, while both companies explored broader manufacturing collaboration. Su's latest remarks indicate negotiations have progressed from a framework agreement towards a final commercial contract, potentially positioning Samsung as one of AMD's key HBM4 suppliers as production ramps up. So this is a great move for Samsung. It's a great move for the sector overall. Yellow for me because of the pressure it will put on the other players in the market, the pressure it will put on Micron overall. But let's jump over to some green signals that we saw today to wrap up the video, because there definitely was a ton of green signals. This was actually one of them. I'm going to put this, as I said, as a kind of green signal for the sector, because we're talking about $700 billion now in supply agreements. When you take a look at the $500 billion deal that NVIDIA had with SK Hynix, the $200 billion deal that we see with Samsung and Broadcom right now, plus the other deals that haven't been disclosed yet, the amount with OpenAI and with AMD, Samsung's deal, Micron's deals that we've seen, SK Hynix deal with NVIDIA, they're all showing us one undeniable truth, that securing physical memory supply is more critical to the hyperscalers than securing logic compute. That is just showing you the leverage that the memory manufacturers have in the market right now. And I want to jump over and take a look at what I mentioned earlier, the candle pattern chart for Micron, because for me, this is also a green signal, the institutional floor. This is the candle chart. I just mapped out the intraday high, the intraday low for you at night, but you can see we gapped up here right out of the gate, jumped up to the intraday high, which was 934.92. We had a little bit of consolidation. We held in that level there for a little bit. And then, in my opinion, we saw the flush that was driven by the news out of China on CXMT, all of the fear and anxiety, what that stoked in the marketplace. And it just flushed the stock down all the way till it got to this 854. Now, remember when I had a video I put out about chartists, the chartists would say it should have kept falling to 750. Like it should have broke through and kept breaking down. But instead, it stopped. The institutional support came in and it rallied the stock up. And what we actually saw were a number of higher highs, right? So we got to here of about 888, I think it was, a high of 881. Then we jump over here to 887. Kind of jump back over here. We saw 897, and then this final push here that took us to just over 900 a share. So to me, this is a nice kind of support that we saw. We stopped at 854, rallied back up to finish the day at 900. That wouldn't be there if there wasn't institutional conviction for this stock. We know 80% of the stock is held by institutions. They stepped in and they drove what you see right now. And I can show you what that looks like in stock block, in some of the stock block trades that we saw today as well. Here's the closing bell for Micron. So you can see $2.5 billion, 2.8 million shares right at the close, right at 920. But also look at the institutional support that we saw after the closing bell. 14 seconds later, we had a $135 million trade for 150,000 shares at $900.20. But take a look at what we also saw here. Over 200 million, over 229,000 shares at 900. Almost $600 million trade here. Almost, we'll call it over 650,000 shares at 900 right here. And then finally, right at 15 minutes after the close, you see a trade for 116 million, looking at about 130,000 shares right now. So smart money, they use the retail panic to build a concrete floor today. We saw it first at 854, but now we're seeing that concrete floor at 900. I know in the after hours, we're seeing the stock a little bit below that right now. So we'll see what it looks like when it opens up tomorrow. Will we find that support level again? We have this support over here at 900 as well. So if the stock can get up over 900, I think we'll continue to see it push. We'll see the whales push it as this will be the new structural floor for the stock, in my opinion. The other area I want to cover is just a shift in kind of sentiment for the options overview. It's another kind of green signal for me because what we're seeing is the implied volatility has come down with Micron. It's down by 2.3%. We're seeing the expected move is in that 5-6% range, $51. So surprisingly enough, if you look to the right, the expected range, the bottom of that expected range is right exactly where that institutional support floor was today, just about 850. But we see the top at about 951. Volume was high today. You can take a look. It was over a million options. Average is about 869,000. But guys, the put to call ratio came down. Remember, it was tracking like 1.3 for most of the time last week. It is under 1 right now. This is driven by heavy institutional call buying directly into the weakness that we saw today. Market makers set the expected lower boundary, like I said, at 848, 849 right there, exactly where we caught the intraday low today, right to that same level. So in my opinion, when I take a look at some of this options overview, I think it does have a little bit of a bullish hint to it overall. It's a little different than we've seen in the past. Wrap up the market, take a look at our scorecard. I'll go through it quickly because green signals, we've talked about them all. The institutional buy the dip. What we saw today with Micron when the whale stepped in to buy that floor, what we saw with the stock trades after hours, those block trades, what we saw after the market closed, almost over $1 billion for Micron at that $900 level. AI infrastructure commitments remain strong. We're seeing Samsung ink deals. SK Hynix is inking deals, $700 billion in binding AI infrastructure commitments. Memory supply is mission critical right now for the hyperscalers, locking up these contracts. And then China's DUV reality is less threatening than the headlines. Get over to the yellow signals. It's all about the memory stress test, the earnings that we're going to see not only in our sector, we'll see with the hyperscalers. Samsung re-enters the HBM race. Great for the sector, probably putting a lot of pressure on the other players like SK Hynix and Micron. And the memory storage, it continues to create customer friction. As we see average selling prices continue to go up, I have an ongoing concern with just consumer friction overall with memory. Red signals, the macro headwinds. We're looking at Brent crude go up. We're looking at 10-year treasury yields going higher. We're seeing, friction with CapEx spending and questioning the return on invested capital for the hyperscalers there. We'll also have a Fed meeting on Wednesday. What will happen there? Will we see an interest rate go higher? The pre-earnings de-risking. So we're seeing hedge funds starting to reduce their AI hardware exposure. Our return on invested capital around the hyperscaler CapEx is causing some movement overall and just concerns in the sector and how it impacts the AI hardware names and positioning. You're just positioning ahead of the Microsoft, Meta, Amazon, and Apple earnings. And then finally, that liquidity shock that we saw with the China headlines today and the impact that it had on the AI hardware name. So that takes me to the confidence score, 7.2 today. Guys, it's still high conviction, but we have high volatility in the market. Mentioned earlier, this is going to be the biggest test this week. Lots of volatility, lots of signals. It's going to be a fun week for us to track together on this channel. What we're watching for below, we're watching for those earnings across the memory sector. We're watching for the earnings with the hyperscalers. It all starts tomorrow. Let's buckle up. Let's be ready for a great week. Let's track it together. Hope you guys have a great night. I'll see you on the next one.